Hello again. Right, I want to talk a little bit about trend analysis because there's a lot of stuff bandied about on the internet about trends and how they work and why they do what they do and so on and so forth. I don't really want to get too involved in that. I just want to talk about the relationship between a the candlesticks and the different time frames, because you'll get people say, "Oh, you can't trend trade on a 5 minute, 1 minute chart or whatever." Trends, the bigger trends are the best things to be trading. The higher time frames, like this massive uptrend here, and that's that. But if we couldn't see that this was an H1 chart, how would you know what what it was? What time frame this was. It could just as easily be a 1 minute time frame or a 5 minute time frame or so on and so forth. So that's the sort of fractal nature of the markets, that trends happen within trends, and as such, that's why I believe they are so useful as a tool to trading. Martin J Pring, I think it is, in his and don't quote me on this because I've not even opened his PDF. You just Google it, and it's got quite a substantial PDF. But he says when a trend is broken when it's trended through in the opposite direction. So, for example, this pullback that has its own trend in here was broken when we had a new trend formed on the opposite direction, in the opposite direction, and it broke some sort of resistance. So I view it as a set of stairs. You've got to break through in order to climb in the instance of a long trade, is you've got to climb the stairs, and all these are is levels of resistance that have been tested and failed, or held rather, and failed to be broken. So once you have broken them, then as long as you come back and test them, and then you can continue in the direction of the trend, and that's all we're doing. This little indicator, the 3 over the 10 moving average indicator, is just telling us that support or resistance on the left hand side has been broken by price. So now I talk about getting back into a trend using a trend. Now, obviously, if we were getting back into this long trend as it stands, we don't appear to be using a trend. But what in fact you have got here, you've got trends on the lower time frame. So as long as you've broken this downtrend with the new uptrend, which is what this alert is telling us, as I've just explained, you can assume it's good to go. Take the trade. So trends can form on any time frame. We use the lower time frame to enter the higher time frame. Hopefully that's clear now. So look at these three candles here. These three lovely green candles. They are what I call a candlestick trend. They're making higher lows and higher highs, and they've broken a lovely downtrend here, making lower lows, a candlestick downtrend I say, and lower highs. So when the alert happens, that's our trend to the downside broken by the new trend to the upside, and the resistance broken in this instance is the high of that final candle. Put a level on there, and that's how I view the charts. It's as simple as that. Trends within trends, and if we drop down now, we'll be able to clearly see this trend on these candlesticks. Drop down to the 15 first, and here you can see now, this could easily just be an hourly chart, and the same thing has formed as on the hourly chart, a trend. Here's the high, low, lower high, lower low, lower high, lower low, and finally that was the resistance line we've drawn on there. Here's the low, high, higher low, higher high, pull back, and off the price goes. If you look at the line chart, you can do the same thing: high, low, lower high, lower low, and a slightly lower high and a lower low. And we've broken it with the uptrend: low, high, higher low, higher high, and this resistance has been broken by price. It's been tested, and the price continues up. If you go on a 5-minute chart, you can see the trend again. You've got your trend down, high, low. Now this is really starting to look like that hourly chart. And lower high, lower low, resistance. Clearly see the resistance there. And on this point, price has bounced off of it, so we've trended through that resistance: low, high, higher, low, higher, high, and it's used that resistance as support there. That's just using this small trend here to enter the long trend here. Trends are powerful, so what can I say? I'm just tightening this up now. This is how I view ascending trend lines as well. I prefer to go to the closes of the candle, so that would bring that line here a lot smoother. I haven't done this before, so we'll see what on this chart, see what this lines up to be like on the close of the candle, and we can see then that that's actually come back and touch that line. That's how I like to view these to draw my trend lines. Also, you probably see it's nearer the line chart as well on the H4. Yeah, and that's what I mean. That's why I use the line charts, because you get the line on the close. I think the line chart is worked on the close of the candles, and as you can see, so that would take away the fear of potentially entering a trade there, thinking the trend line was further back than it actually is. Just a little tip there: draw the trend line on the close of the candles. Just, all these things come with experience, of course, and there's that trend we were talking about. So trends within trends, powerful little tool. Thank you for watching again. Don't forget to subscribe or like the video if you actually like it. Thanks again. Bye.